is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. As we kick into the fall, folks, let's make it a great one. To master love, you have to practice love. The art of relationship is whole mastery, and the only way to reach mastery is with practice. To master a relationship is therefore about action, not about attaining knowledge. Market-wise, let's take a look at it out here. We have the Dow Industrials down 153. NASDAQ is up 4. S&Ps are off 8.5. Gold contract up $2, trading at $12.03 an ounce. Silver, flat, $14.31 an ounce. Light sweet crude, big bid, breakout. We'll see whether it stays out. Up $1.43, $72.21 a barrel. Notes and bonds. You get the 10-year note down 2 ticks, 118.19. 30-year bond down 4, 140.07. King dollar down 13 ticks. Trade 93.785. The euro is at 117.57 to 1 U.S. dollar. The yen is at 112.73 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get the SPY trading out at a price point of $291.20. You tucked right back inside the, well, it's not a lower range. It's tucked inside the high that was generated out here on the 29th of August. That's $291.74. Bottom line, we'll see whether it can make its way down into this 282 level. 282 is the swing low from August 15th. NDX 100, we go take a look at the NDX 100. NDX 100 today is rejected lower price at the 181 level. You're at 183 right now, and that baby is saying that, hey, guess what? You know, yeah, you can have all the FANG stocks, well, not all the FANG stocks, but you can have the basically Google, Facebook, Twitter. They're going to be on the hot seat once again. Bottom line, though, it looks to me like these NDX 100 wants to go make a run once again for the 185.79. That's the lows of the highs. Now, we didn't make it last week. Last week, you get up to the 185.48, and you did give it up and give it up in spades. Some of the higher volume equities out here, GE's the big problem out here. Now, GE's been coming down forever. GE's down 46 cents today. What you've done is this has been building cause for quite some time to get into the high of the low of 2009. Bottom line, it's going after it. You hit 1160 out here today. I believe it's 1134. 1135. So the high of the low from 2009 is 1135. That being said, it looks like we are going to basically get into not only the high, but the way this is trading right now, meaning that you're breaking swings, you're breaking them with volume, that when I take a look at this, looks like it's a ABC structure on the way down. The real question is 1440. Yeah, you get $3. 990. Yeah, it's going to go to the low. Well, the ABC is approximately 998, but if you get into that bar by a couple points, your probability goes much higher. You can go to the bottom. See, the top of that bar is 1135. The bottom is 572. it looks like we're going to do a confirmed ABC structure on the way down. Now, that's on the weekly. If this is ever confirmed on the monthly, which it could be, that would really present a problem. You know, right, thus far it's a weekly, but you can see, bottom line, GE is not the GE of the past. No two ways about that. Pandora is up 3 cents. You got Sirius Satellite that's going to take over Pandora. Sirius Satellite shareholders don't like that deal. That's down 10%. Pandora is flat. You get Micron Tech up 45 cents. Apple's up 263. Tilray, Facebook is up $2. Tilray, which was of course, the cannabis stock that went to the moon last week. Bottom line, now it's going to hell in a handbag. We just went from $300 to $97 in 4 trading days. And bottom line is that this is not done. And it shouldn't be done going down, folks, because the bottom line is that Tilray takes in gross they took in $9.7 million last quarter. They plan on taking $9.9 million in this quarter. Bottom line, you can see euphoria is out there, and unfortunately, there's folks that are more than likely trapped like rats inside of that equity. We get over and we take a look at the Dow Industrials. We take a look at the strength versus the weakness inside the Dow Industrials. Point-wise, what you have is this. You get Boeing putting 24 negative points in, Home Depot 21, Goldman 16, putting positive points inside it. You get Apple putting 17, Disney putting 15, Chevron putting 9, Exxon putting 9. And we take a look at Disney. Disney lost the battle to go get Sky. Comcast won the battle. Market is digging that Disney lost the battle. That's up $2. If you go if we go to Comcast, it's just the opposite. The market's looking and saying, hey, you paid quite a bit of money. It's down $2. That's not the end of the world. It had been down $4. Basically shook that off. We were down trading at $34.75. You're at $35.59 right now. And bottom line is that as the media giants are going to basically fight it out worldwide now. First it was fighting in Europe, fighting in Asia, fighting in the U.S. Now you're going to see a worldwide fight in a big way. King Dollar. Let's go over and take a look at King Dollar. King Dollar doesn't have enough juice. Bottom line, you're down. You're testing those lows. Has light volume, only 16,000 contracts. We'll see how this shakes out. See if there's more sideways movement. You can expect, let's go to the bonds actually next. You can expect 2 o'clock Wednesday afternoon, folks, you're going to get some action. 10-year note out here today is testing the lows of the last 4 days. It is lighter volume. We'll see whether they can get any juice. The 10-year note has to get back inside 118.27. Right now, you're at 118.30. What the 30-year did do, the 30-year did come down to the lows of May, did reject the lows of May last Friday. And so we'll see how that baby is going to shake out. Stay right there, folks. Got our man, Mr. Steve Rhodes, coming back. We're going to be talking markets. Dow Industrials right now down 149. NASDAQ is up 3. S&Ps are up down 8.5. Coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now down 157. You get the Nasdaq up 2. S&Ps are down 9.5. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Now, don't forget, folks, Steve has an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter. He's the #1 market timer according to Timers Digest in the S&P 500, and you can come right to the front page of our website at TFNN. You're going to see right under featured content, mastering probability. You can hit that. Bottom line, subscribe right now. Whether it's monthly, daily, yearly, they all come with a 30-day money-back guarantee. Steve Rhodes, what's going on?
Well, you know, I think to celebrate the new website, we ought to go over and do Friday's show in Paris in honor of the Ryder Cup out there.
Oh, yeah.
How's that sound to you?
That sounds dynamite, man. I like it.
Let's take the show on the road.
And you talk about, I don't know what channel's going to put Phil and Tiger on, but whatever channel that is that ESPN? Oh. Whatever channel that is, everyone's going to be watching that, man.
Yeah, it's pay-per-view, so I don't know how they...
Oh, that's even better. It's pay-per-view. Oh, my God.
Yeah, yeah. So it's going to be one of the... I think it's a winner-take-all kind of a deal.
Yeah.
You know, 10 million. I don't know what the actual price tag is, but
pretty cool, right?
You know, we just finished a great weekend of golf. I don't know if you caught some of the FedEx Cup and Tiger's comeback.
Yeah, it's pretty sad. I didn't, but I know.
Yeah,
I listened to some of it, but I didn't see it actually. But
yeah, pretty incredible Saturday. Just to see his first 8 holes.
Yeah.
It was just kind of spectacular golf out there. You know, every golfer would like to have, 8 holes like that with so many birdies and in such a pressure-packed kind of situation. So sure. I think we've got another great round of golf this weekend. The U.S. team does not fare well on European soil. So,
okay.
but you never say never.
Right.
But I think we're like 2 for 11 out of the last, 15 years, 20 years, whatever. Yeah, yeah. We do not fare well on U.S. soil. So we'll see what happens.
Okay.
But hey, I wanted to give folks just a quick update. Last week when we were together, we were talking about the Dow. I want to do a couple things. Talk about the Dow, talk about the workshop that I'm going to be doing next Wednesday.
Yeah, right.
Yeah, so we'll talk about that. But just a quick update here for folks that didn't listen in, just kind of on a summary. The chart that Tom and I are looking at right now, it happens to be a quarterly chart for the Dow, and it goes back into the 1925 time frame. And the blue line, and and there's really, and I'm just looking at trend lines, folks, and there's a couple different ways that you can do it when you have a large amount of data. Especially when you have such a wide degree of price, you can put most charting packages will let you change from a typical linear chart, which is what we look at, to a logarithmic chart. And the blue diagonal line on my chart out here shows the top of 1929, the high in 1966, and what we can see is that the 87 crash actually was nothing more than a test of that trend line. And we never saw those lows from 87. You know, the crash lasted basically 2 days, 1 day, 2 days, really. The following day was a slightly lower low. And then we never saw those lows again. And that rejection of price created what I'll just term as a plateau to the next level of pricing inside of the Dow. Folks, this chart here just takes a look at the current Dow picture, and this is set to a logarithmic scale, and the blue diagonal line, the same exact trend line, is connecting the highs in 2000 and 2007, and price broke above this trend line back in January 1987. Now, I had been expecting and anticipating that as we get above a trend line or we get above a consolidation area, a swing point, that we would see price come back and test that level. And over the weekend during Labor Day, when it was just pouring rain in my neck of the woods, I kept saying to myself, we have extended so far beyond that logarithmic trend line. What am I missing? And what I did was I took that same chart and set it back to a linear scale. But I also went back to long historical data, so went back to the highs in 85, connected the 1987 high, and that's the green diagonal line that we're looking at on our chart.
Yes.
And what was amazing to me was how we had in 2018, in January 2018, we had the Dow bust through that linear trend line, and then the correction that we had in 2018, the February through March in essence time frame, was nothing more than a testing phase of that trend. And then in July, price just took off of that. And what I had stated last Monday was that if the Dow closed above the 2018 high at 26,617, we would not see the lows again that we saw in April, that we were on to another new plateau in price, and that price did not need to come back to that blue diagonal logarithmic trend line. Now, the caveat here is this coming Friday, which Tom and I were just talking about as far as the Ryder Cup, is the end of the month. And this is a monthly time frame chart that we're looking at. So what I really want to see as proof in the pudding come Friday is a close above 26,616.71. What happens if we don't get that? Well, it says that we're still in kind of this consolidation type move that we haven't been, or the Dow hasn't been able to successfully take out a level of resistance. If we close above it, boy, this market could actually get linear. So 26,616 is the level. This here happens to be a chart. This is a chart, a monthly chart for the Dow showing horizontal trading ranges. That was created or brought to us by Bud Rolfs, as well as different price channels within inside the Dow going back to 2009. So we'll see the 26,616, but from a horizontal trading range level, it's 26,495. So if you were to ask me, how far back could the market pull if we close back below this 26,616 level? It would be the 25,000 area. 24,896 is the bottom of this horizontal trading range. So that could be the consolidation area that we could be in, because Tom, traditionally, what the market does in September, October, is we see some type of pullback into about the middle of October. So we're coming towards the end of the month. You know, it still is a potential, but it's all going to depend, from my standpoint, whether or not we see a close above 26,616. If we do, it signals to me a runaway market. And in a runaway market, what I mean is we're taking a look at the A to B equals CD pattern, one of the cool patterns that you and I look at. We can see here, coming off of the March 2009 lows, again, this is a quarterly time frame chart, that the 1-to-1 is at the 27,251 level. But the way that I have mastered the A to B equals CD pattern, this would suggest to me that we're more likely looking at a 1 to 1.618 longer term, or a 1 to 2 A to B equals CD. So I've got that 34,000 to 39,000 level, about another 50% higher than where we're at. And on next Wednesday, what I'm going to do for subscribers is teach them how to master the A to B equals CD pattern. And folks, if you're not a subscriber, you come over to the homepage, the new homepage of TFNN.com, and sign up. As Tom said, you've got a risk-free 30-day trial to test drive Mastering Probability. You gain access to this workshop, as well as 3 others that'll be put on your members page. So it's a great opportunity for you to learn the A to B equals CD pattern, which was really introduced to us in 1935 by a guy named H.M. Gartley. Now, he produced a book called Profits in the Stock Market. He published it in 1935, right during the Great Depression. He priced it, Tom. You and I would love to be able to write a book like this for $1,500, the equivalent of 3 Fords at that stage. That would be about $60,000 today.
That's amazing.
But here at TFNN, it's free to come learn H.M. Gartley's A to B equals CD pattern. So that's what I'll be doing next Wednesday, and I'd love to teach as many of our listeners as we can.
And folks, come to the front page of TFNN. You're going to see right under featured contact, Mastering Probability. Do it right now. One safe one. Look forward to the show tomorrow.
Thanks, Tom.
Stay right there, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now trading down on 157. You get the Nasdaq up 3. S&Ps are down 8.5. Let's go over and take a look at this composite. So the composite's the only one that has any strength out here today. The composite traded to a low of 79.12. Rejected it. You're at 79.91. Composite, bottom line is it's going to give it another shot. What we did have last week when the S&P as well as the Dow Industrials were making new highs, the composite couldn't get through its downdraft from the 5th of September. It was that's where we went south with wide price spread with volume. Then we went south again on the 17th of September. So that's what it looks to me like it's going to turn to make another run up into that area. Google, let's go over and take a look at some of the tech stocks here. Google trading up $8, 11.74. That also rejected the lows at 11.46. We go take a look at Facebook. I think they're all going to be set up kind of the same. Yeah, Facebook rejected the lows at 160 or 165. Let's go take a look at Netflix, NFLX. Netflix, yeah, exactly. Okay, 354 was the low. You're at 368. If we go inside the NDX 100, looking at the strength versus the weakness, you got Alexa Pharmaceutical. That's up almost 5%, 4.9%. You get Mercado Libre up 4.2%. That's an internet stock in South America. We got Symantec up 3.8 and Intuitive Surgical up 2. Taken away from it, Sirius Satellite. The Sirius Satellite is buying Pandora. That is trading down 10%. That has volume and the move down, no doubt about that. Let's pull that back just for a second. Okay, so this equity in the last year went from $3.20 up to $7.60. You're backing down where the strength was. That's all it's actually doing. We got, let's see, JD.com is down 7.7%. That's a one. That's a big one. We'll pull that up. You get Comcast down 6.2%, and American Airlines is off 3.9%. We go back to JD.com. What you have with JD.com, let's see. That's breaking lows. The stock is down from $45 3 months ago. You're at 24, and it's going right after its low. So let's get a high volume low laying out here at about $20. It's going to go after $20. Now, what we did have last night in Shanghai, and this is something you want to keep your eye on, is this. If we go over to the Shanghai, the Chinese markets have got smoked. That being said, it looks to me like they're not only off their bottom, it looks like they want a lot higher price. And this is what it is. So in 4 trading days, we just went from 26.44 to 27.97. So you basically went up about 10.5%, 11% in 4 days. Now, you did it with volume, and that is after coming back, testing the lows of 2016, rejecting them, as well as having light volume. Let me pull this back so you can see how this is set up here, man. It's pretty cool how it's set up. Okay, so what you have is this. If you happen to be watching Tiger TV, I brought this back to 2004 so you can see the whole, how Shanghai likes to trade, number one. You can see 2005, Shanghai's trading at 1,067. 2007, you went up to 6,000, 6,100, monster number, right? Okay. Then what do? Bottom line, you go south to where we broke out it from, 1,700. You bounce along for years. You get a high going in 2015 all the way up to 51.70. And what we just did is that we just came back into that area where we had strength. That's where it really went. It rejected lower price, and you came off that with strength. Now, so that's saying that Shanghai wants to run back up to the 3,500. We'll see whether they get any strength. It's definitely a heads up, because if you, now I'm going to go from there to the euro. The euro is trading at the top end of its consolidation. That is telling me that the euro wants to break higher. We're at 117.54. If we get over the 118.51, it's game on to like 124. So that's a big number. In that correlation, it's going to be about the dollar. And this is where I'm going with this. I think that we're right at the point where the dollar is ready for a nice change of trend. Meaning that if we take a look at the dollar's been basically, last low it made was January of 2018. So what's that, 9 months ago, right? We go sideways for about 4 months, then it takes off. Now that being said, that it took off, it still only did, let's take it, and the currencies love to trend big time. So we did a 50% retracement from the move of the January of 2017 to the low of January 2018, okay? Then, if you take a look at what we actually were doing, what we had done is that we were building cars to get over the October 2017 highs. Well, we came back inside of those with conviction. Now, when you come back inside something with conviction after you break out, bottom line, you got game on to the very bottom of where we were. So we're at 93,800. I suspect what we're going to get, you know, the lows that we're talking about here are 88,150. I suspect what we're going to see, it's going to be all about the statement on Wednesday. So the Fed meeting, they're going to come out with a statement Wednesday. In fact, all the Fed meetings coming up in 2019, folks, each one of them have a news conference after the meeting. So what that does set up, you know, there's going to be no dead Fed meetings. And a dead Fed meeting would be specifically that if there wasn't a news conference that was booked, the market participants looked at, okay, there's not going to be a rate hike. You know, the Federal Reserve always saying that, yes, well, we can change that and say there's going to be, but bottom line, now what they've done, they've put in a news conference each and every meeting. And if you are looking at my screens, you're going to see that we're at 100% probability that it's going up 25 basis points this Wednesday. And November 8th is the next one. We're at a 2% probability. But you can see on December 19th, you were at a 76% probability. That would bring the short-term rate, the first rate hike coming this Wednesday will bring it to 2 to 2.25. The second one would be 2.25 to 2.27. And that's going to get really intriguing because right now you get your 10-year trading at 3. And then you get your 2-year. This is where this is going to get wild because your 2-year is already at 2.8. You know, so bottom line is that basically starts flattening out that curve, and we'll see the demand versus the supply. You know, thus far, the 10-year did break its August low. 30-year, however, what the 30-year did, the 30 went into its May low, rejected it, and we'll see whether it can come off that level. You know, that's how that thing is set up at this particular point. The May low was 140.05. We came down there last week, and right now we're sitting right at 140.06. So you're sitting right there. So you can expect notes, bonds to get big action come this Wednesday. If we look at the TLT came down, did test its low from May, rejected it, had some volume on the rejection, though. Bottom line is that you did 13 million versus 7. So the TLT certainly can come back and test that swing low once again. Dow Industrials right now are down 167. Nasdaq is up 2. S&Ps are down 9. Coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus you have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow's down 173 to get the NASDAQ up 3. S&Ps are off 950. Let's go over and take a look at Great Panther. So Great Panther, folks, low for the year is 78 cents. The high is 145. You're trading at 88 cents. We take a look at this, and what you did have last week, bottom line, Great Panther come off these lows of 80 cents. You got up to the price point of $1. You're pulling back, and that's some decent pullback on the day. That being said, 86 is the number you want to see to hold here. Now, what you also have, which is kind of intriguing, actually, I see if I can get the new CEO on. What Great Panther just did, GPL. Let me get this. They just did a acquisition. It was a friendly acquisition of a much larger company. So I'm not quite sure how this. Let's go through it. So they're buying Bedell Resources. This company here, let me pull this up for you so you can see. Let's see. This is an Australian company. Let me get this up. BDRAU. Okay, BDR. Okay, so this company here, their primary asset is the Tucson Gold Project, which is in Brazil. They also have an extensive portfolio of gold exploration in Australia as well as Brazil. It's a producing company. This is where it gets really wild, actually. And I can show you something that's what the difference is. So this company, Great Panther, only has 169 million shares outstanding. This company, unfortunately, has 1.6 billion shares outstanding. They do take in, though, I think 241 million. That would be 241 million Australian, different ball game. Whereas Great Panther takes in 88 million Canadian. But bottom line is that they're buying a much larger company, and we'll see where this whole thing shakes out. Technically, the way this is set up, what you want to see is that you can get into this 86 price point. You want to see it hold. Put this on a weekly for a second. Yeah, on a weekly, we still want this to get back inside $1.06, and right now you're at 88. So, yeah, that is, and the deal, let me get the deal for you again. The deal is, I believe it's an all-stock deal. Okay, yeah, it's an all-stock. Okay, in terms of the, it's interesting, like the Europeans, they're like when I happen to always say deal, they call everything a scheme, and that's a scheme, and that's just, it's not a bad word, but it sounds like to me it sounds like a bad word. I don't know, but anyway, that's the correct English for it, scheme. Under terms of the scheme implementation deed, Bedell shareholders are going to receive 0.0619 common shares of Great Panther for each ordinary share that they own, resulting in an issuance of approximately 103 million Great Panther shares. Okay, so let's do that. Let's do the math on that. Okay, so we're going to have 100. That's not that bad, actually. No, it's not. Okay, good. So that means that Great Panther will end up with 271 million shares. That's not bad. And we'll see what they can do with the company. That's the bottom line. 877-927-6648. If we do go over to look at the Barrick Ranggold Resources, now this is going to get really intriguing, folks, and this is why. You have the CEO, well, the chairman, ABX. Let's take a look at this. So, Barrick Gold, the chairman of Barrick Gold is a Goldman Sachs guy. When the chairman that retired was one of the best known and most respected gold folks in the world. He retired. I don't know if he died. I hope he didn't die. I forget. But anyway, he retired. When he retired, John Lawson Thornton is a Goldman Sachs guy. So he came in. When he came in, bottom line, he came in as the chairman. And what you did have here is that he, of course, public companies always have to grow. In this case, they didn't grow. In fact, he was getting rid of every asset that he felt was bringing the company down. So the company, Barrick Gold, which was still the largest company in gold company in the world, he went from taking in $10 billion in 2014 to 7.5 this year. Now, that being said, one of the problems inside the gold business in general is that it seems that gold can keep going higher, and even in good times, these gold CEOs end up spending too much money. And the way they do spend too much money is that when gold goes up to $1,400, $1,500, then they buy the assets at that particular price. They think the thing's going to last forever. It comes back down again. Well, in Barrick's case, their strict rule is that they won't put money into a mine unless they get a 15% return on investment per year. They want to keep the cost at $1,000 or below so that they can still make money at that particular point. Barrick actually brought to their bottom line last year $750 million, so they brought big money. That's Barrick's case. Ranggold Resources, their strict policy, and if you listen to TFNN for a while, I've had Mark Bristow on many times. Great guy. I mean, this guy, if you want to see something amazing, folks, this is what's so cool about this. This guy is a great guy, number one. And the way I met him, I sat down for an hour and a half talking with this guy many times. When you look at his management, right, he's been there 23 years. This is the guy that started the company. In fact, when I interviewed him, he explained how he started the company. He's been there 23 years. And you see this, his CFO, his CFO has been with him for 11 years. Then the person in charge of corporate finance, 17 years. These guys are going with him. They're actually, one of them just got I believe the same CFO got the same CFO job. Anyway, longevity, this company has huge longevity, big time. So, and in Ranggold Resources, he doesn't get involved in anything unless he can get a 20% return on investment year after year, but he uses the same number, $1,000. The new company management is going to be, you're going to have the guy from Barrick is still going to be the chairman of the board of the whole company, and Mark is going to be basically, he is going to be the CEO as well as the president. So I expect, and now check this out. When you put this together, they own 5 of the 10 largest gold deposits in the world. So now we'll see whether they can get the scale going. What has happened is that Ranggold Resources had been the strongest gold equity, bottom line until about 6 months ago. And that was the strongest gold equity for quite some time. Each time we seem to have a huge correction like we have, you always get a new leader. I remember 2002, you had an Eco Eagle. Gold Corp. Then an Eco Eagle took over. Then Ranggold Resources took over. Bottom line, now it's Royal Gold. Royal Gold's the number. But I expect a lot out of this new company. 877-927-6648. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now down 169, NASDAQ up 6, S&P's down 9. If we go over to take a look at the SPY, we have inside the S&P, folks, you basically slightly lower, light volume. That says bottom line looks like it wants to get up into those highs once again. We go take a look at the small caps. Russell 2000, a different ball game. Russell 2000 is inside its lower range. Anything inside the $170.20 gets it, well, is inside the lower range, and that does set up that the small caps can get down into 162. The NDX 100, the way the NDX 100 set up is that it has rejected lower price out here today. Bottom line is going to have lighter volume. So the NDX, once again, is going to have a chance to get up into the highs. Now, that being said, last week it had a huge problem getting by the September 5th area. What you did have out here today is that all these tech stocks, they're running, and they have some juice behind them, too. When you do look at this NDX 100, you can see out of the top ones, you don't have Apple, you don't have Netflix, you don't have Google, you don't have, well, actually, let me look at Amazon. Amazon's the only one. All of those stocks I just mentioned, by the way, are up. They had rejected lower price, as did Google. See, Google was down to 1865. You're at 1913. They all rejected the big techs all rejected lower price. And then on top of that, what you had, the movers out here, you got Alexa Pharmaceutical, that's up 5.5%, Symantec's up 3.5%. But let's take a look at Alexa, because Alexa's up $6.80. And let's go look at the IBB, because if the IBB starts putting its head up, that could give some juice into the NDX 100. Yeah, well, the IBB, that's going to have a problem for September 6th also. It's a close call. Couldn't make it last week, but the IBB just may be what the NDX 100 needs to get up and test that area once again. Stay right there, folks. Good numbers coming out after the close. Dow Industrials right now down 167. NASDAQ is up 8. S&Ps are off 8. We're going to be coming right back with more numbers after the close, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's make it a great week and a great fall. We kicked into fall this week. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We had the Dow Industrials finish down 181. NASDAQ was up 6. S&P's down 8. Gold contract down $2.10, trading at $12.03 an ounce. Silver, flat, $14.30. Light sweet crude up $1.50, $72.27 a barrel. That had some juice underneath it. Let's go over and take a look at that contract. That contract broke the consolidation. The last 8 months of this consolidation we're in, you did 553,000 contracts out there. Now that's bottom line, not bad contract volume, not great contract volume, but you got over the highs, which is $71.10. If we do go take a look at the continuous contract inside the oil market, we bring this back, and what you're going to see is that now you are into the bar from July of 2018, and that's where we went from the $74 level to $70 level. Bottom line is that the way this is set up, you can make your way up to this 72 you can make your way up to the 74.26. That's how that baby is set up. Notes and bonds. You get the 10-year note down 3 ticks, 118.18. 30-year bond off 7, 140.04. Both notes and bonds, they're going to be waiting for the Federal Reserve statement on Wednesday, 2 p.m. What we did have last week is that you had the 10-year break. Its August swing low. Hasn't gone after its May swing low yet. 30-year did test its May swing low last week. They rejected it. What you have out here this morning, today rather, is that it's right at it once again. On the continuous contract, it's a 140.04 number, and I believe that's right where we're at. Yeah, 140.05, so you're at 140.04. Bottom line, you're 1 tick below it. That being said, where we did get the rejection last week, we went down to that 139.24. You rejected it. And now let me go into this contract that we're trading. We're trading the December contract. And what we want to see, okay, so you did 240,000 contracts. And what we want to see is that, yeah, okay, so pretty cool. So you're going against 434,000. We went down to a low today of 139.30 on this contract we're trading right now. 139.23 was the low. Bottom line, you're going to need more juice in order to get to lower price in that 30-year. But what I do expect is that big volatility come this Wednesday. King dollar, bottom line, sideways move out here today with King dollar. You had light volume. King dollar got inside its lower range last week with conviction. That being said, bottom line, there's no sellers right here. We're down, we're up 42 cents, 42 ticks rather. It is in the bar from the 14th of June. My take is that we want to go into the bottom of that bar. That's where the strength was. That's 92,500. Starbucks. Let's go take a look at Starbucks, SBUX. What you have with Starbucks out here? Starbucks bottom line. We haven't seen this in a long period of time. You do have a new CEO out there. Bottom line, Starbucks down 76 cents today, trading $56.96. We pull this back. You're going to see that Starbucks is definitely off its high of the $64. Not bad, 56. And what you have, Kevin Johnson, who is the new CEO of Starbucks, they, bottom line, are going to basically I don't know if they're going to reinvent themselves, but they're planning an organizational shakeup, including corporate layoffs. Let's see what he has to say. We must increase the velocity of innovation that is relevant to our customers, inspires our partners, and meaningful to our business. To accomplish this, we are going to make some significant changes to how we work as leaders in all areas of the company. The changes are going to start this week, and they're going to carry into November. Let's see. So it's one of the largest, of course, restaurant companies in the world. They have 28,000 cafes. Hey, we'll see exactly what they're going to do. General Electric out here today took a hit once again. Bottom line with GE, folks. GE, number one, has been making its way down to the high of the low of 2009, and we are right next to it right now. I suspect we're going to go into it. The high of that low is $11.35. You made it to $11.60 out here today. You came down with 148 million shares, and what that did is that you broke a swing, you broke it with volume. You get a small ABC structure on the way down on the weekly. On the monthly, it better not be an ABC down because it would be an out-of-business ABC down. We're getting close to the end of the month, but bottom line, on a weekly, it is an ABC structure on the way down. Your A point is 1440. Your B is at about $12, so it's only about $2.50. That would get you down, though, into the price point of 10.25. And at 10.25, it's going to be still a toss-up where you get to the bottom of it. It's the deeper that you get into that bar, meaning the low bar, the higher the probability is that you're going to go to the bottom of it, because that is a high volume low bar. We did 5.9 billion shares there. So the bottom of that bar is 572. The top of the bar is 1135. If we get into that bar by $2, so let's say 935, your probability is very high. You're going right to the bottom of that bar, and that's going to be a real problem. If we take a look at this on a monthly basis, it doesn't look to me like it's going to be able to get enough volume to do an ABC structure on the way down on a monthly, because you'd need like 1.5 billion, and right now we're close to the end of the month, and we've only done 922 million. That being said, if it did what it did out here today, you'd get it. We did 148 million shares today, and I believe that's going to be one of the highest volume equities out here. Yeah, it is the highest volume equity out here today. Tilray, we were talking a lot about Tilray last week. Tilray imploded. Tilray went from a price point of $300 in 4 trading days. We closed out at the low, $99.50. Still don't touch this thing, man. This thing is still way overvalued. This thing is going to go back to $39. Who knows? Less than that. Stay right there, folks. Come right back. Dow Industrials finished down 181. NASDAQ up 6. S&P's down 8.5. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. 877-927-6648. Give us a call, folks. Now, we're in the fall. Bottom line, let's go to natural gas. Natural gas caught a bid out here the last 5 trading days. We just went from 275 to 304. And bottom line, folks, what you have out here. So the last swing high was 302. You're at 304. NG1. Let me get this baby up. So, okay, we take a look at the continuous contract. And you swing high on this one's 305. And right now you're at 304. Bring this back. Okay, so if we launch this 305, which you're right next to, by the way, what's game here then is like 366, which is going to be pretty wild. Because what did happen out here today is something that hasn't happened in 11 years. And what it is that the spread between the gas that is going to be delivered in March versus April, bottom line went up 31 cents. Now, 31 cents in the natural gas contract, folks, is $3,100. You know, a dollar is 10,000 bucks. Bottom line, what this is all about is that traders basically, they're betting that there's going to be a cold spell. Number one, and then what they're also basically looking at factually, as our man, Mr. Jason Path, has been talking about for quite some time, is that the build right now in natural gas, getting ready for the winter, is substantially much lower than it has been in the past. So if, in fact, we do get a cold spell, the bottom line is that supply versus demand, you will see an expansion of price that we haven't seen in quite some time. So it's going to be pretty wild watching that shake out. Inside the oil market out here today, let's go, you know, the oil went, gasoline went. Let's actually take a look at gasoline. That affects all of us. Gasoline is trading at $2.06 wholesale. That little baby, XB1. Okay, so, oh, intriguing. Okay, so we really haven't broken, yeah, we haven't broken the downtrend yet. Okay, so we bring this back. You get beginning of the, 2018, well, May we're 228. You know, we get down to 192. You're just coming up into the gap here. So natural gas, gasoline, 210 is game. That's what's game out here. But this certainly hasn't broken the downdraft that it's been in. Copper, what you had with copper last week, it was a big move. Copper went up 10 cents. Today you pulled back 3.5 cents. Let's see how we did it. Okay, so copper definitely broke its downtrend. Did it with volume. We came off the low of 257. You're at 282. And your differential here is pretty substantial. Let me see this. Yeah. So copper has a shot of going up to like 335. Right now you're 282. We went topside on Friday. You did 158,000 contracts. You go sideways out. Well, you go down today with 90,000. And I can see the flack. There's some flack at $2.88. We went to 286. But the way this is set up right now, let me put this back on a continuous also. So we take a look at this one. Bring this back. Oh, interesting. So what this actually did, this came down into its strength when we had broken topside in November of 2016. Rejected it. And now you get game again, right? 332. Yeah. It's going to be interesting to see, if this can hold. Let's go take a look at a couple copper stocks. So we'll take a look at the largest copper stock out there, which is Southern Copper, SCCO. So that came off the lows last week. $39, went to 44, back down with light volume. Yeah, this came back to support. TGB, now this is a small one, but this moves with copper, no doubt. Bottom line, this is off a high of $1.40. You're at 82. This one's going to need a little more volume, but that being said, if copper moves, this baby will move. That came back into its strength from December of 2016. This kind of traded like a gold stock also. And, it's Taseko Mines, and inside that, let me just look inside that, because it's definitely, yeah, it's a gold exploration. But revenue-wise, yeah, you can see the difference. The copper, they take in 387 million. Gold, they only taken 2.1. This is definitely a copper equity. No two ways about it. Barrick Gold and the Rangel Resources, they're going to be merging. That's going to be one of the largest. That's going to be the largest gold company in the world. What you do have happening out here this week is that you also got the Denver Gold Forum. The Denver Gold Forum, folks, takes place in Colorado Springs. It is the largest institutional gold meeting. 7/8 of all publicly trading companies basically at that meeting. They're all CEOs, CFOs, plus institutions that interested in either buying them. They don't want to sell them. That's the bottom line. That's where this announcement was done last night. You can expect a few more announcements coming out of that meeting. The real question is going to be what did happen in the Barrick and Rangel Resources. It was an all-stock deal. So it's hard to value, well, you couldn't value when it's an all-stock deal. That's what it comes down to, because it was a merger that the Rangel Resources is going to own 1/3 of the company. Barrick is going to own 2/3 of the company, meaning the shareholders. That being said, you are going to have Mark Bristow, who was the CEO of Rangel Resources. He's going to be the CEO of the new Barrick, as well as the president and the chairman of the board, who was the chairman of the board of Barrick, is going to stay the chairman of the board. Bottom line, though, I suspect, let's go take a look at Barrick, because the chart-wise, the chart's going to stay the same. So if we take a look at Barrick, this is an equity that got smoked from down $55. It was trading in 2010. Went down to a low of $6.51 in 2015. Got a bounce going to $23 in 2016. That was the last big move we had in gold. This went from $5.91 up to $23, four-bagger. That being said, it's a classic time in the trade. You pull higher, you come back into that and reject lower price. We had come back into 520 million. We did that last month with 308 million. You took off topside. What it hasn't done yet is broken its downtrend from the July of 2016. I'll bring this closer now. Let's bring this into like 5 years, because then we can see. Oh, this is pretty cool. Okay, so it's not gonna be long that we're gonna get that test. You can see the trend, top of that trend line, $12.57. If we break that trend with wide price spread, volume, you get $23 coming at you. Stay right there, folks. Come right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at the volumes out here. Inside the NYSE, we did 876 million. Inside the NASDAQ Composite ran out with 2.4 billion. What we did have on Friday, which is pretty cool, folks, okay, that was the first time since 1999 that we had a changing of the sectors inside of the S&P. Bottom line is that went off without a glitch. And it's pretty amazing, too, because when you want to take a look at the amount of equity that was bought and sold without actually moving the market, it was pretty incredible. 2.6 billion shares inside the NYSE, and what we did inside the NASDAQ, we did 3.7 billion. So what you did have is that you had equities that had to be bought out of one sector, sold into another, equities that had to be sold out of one sector and bought into another. What we did get out of that, which is pretty wild, if you take a look at the XAU and the HUI, watch this. It was a huge amount of trading inside these equities. The XAU normally does about 28 million shares a day. We did 175 million shares in the XAU. Gold Bugs Index. We take a look at the Gold Bugs Index, HUI. Gold Bugs Index is trading at $144.37. And that, baby, normally you do about, 24 million. We did 154 million. Yeah. And now as we take a look at these, in both cases, what we did do, well, first off, let's start with the Gold Bugs Index. We did get back inside the $142 level. It's not the higher range, but the bottom line is that it is a range. The top of that range is 155. We'll see how this shakes out. The XAU, we take a look at the XAU, and what you're going to see in the XAU, we are at 166, and that 65 was the number to get back inside that range, which we did. Now, what's going to get intriguing here is this. So watch how this shakes out. So the GDX that today was basically, well, was flat. It was up 2 cents. The GDX is also inside, it's a higher range. $18.47 was the number. We got inside of that last Wednesday. We're at 1880. And that being said, what you do have is this. You're going to see that when we take a look at the weighting structure, Newmont is number 1 at 9.6 weighting. Barrick sitting there number 2, 6.9. Franco-Nevada, 6.7. Newcrest, 6.3. You get Goldcorp down at 5.2. The Barrick deal is going to be interesting because what I suspect we're going to see, let's go over to Barrick for a second. Because this is an all-stock deal, you can just basically look at this just as an ABC structure in the way up or way down, whatever you have. And what we did have out here today, people like what happened in this moved by Barrick and Rango Resources. Barrick came in with 48 million shares today, takes out a swing, big volume. The top of that swing was $10.80. That's setting up basically a run to 1180. Let's see where, yeah, so that makes sense. 1180 is the gap up there at 1180. And if that's what we get, let's pull this back a bit. Okay, so, well, this is going to be interesting. It's because 1180, yeah, that's 1180. Yeah, 1180 is going to get it back inside a much higher range. In fact, you can make the point that we only need a few more cents. $11.77 will get it back inside a higher range. Now, what you can see, as I said a little bit earlier, what Barrick has not done, and it has not broken its downtrend. Yeah, that downtrend is still sitting there, and that downtrend line is $12 and change. That's how that is set up. Royal Gold, what I do expect you're going to see with Royal Gold, the way Royal Gold is basically set up here, it looks to me like number one, you had a couple of nice signs of strength coming off the low. The low that we're talking about is $71.90. You're at $77.76. We are going to need price spread, but what Royal Gold did, it came right back into its strength from May of 2017, had lighter volume, had strength off of that. Now I suspect we're going to try to make a run to get back inside the higher range. And we're only $1 away from the higher range in Royal. Royal would be $78.78. If we get back inside of that, then you get game, because even with gold at low prices, the amazing part about what Royal Gold actually did is this. So Royal Gold made its high in October of 2017. And if we take a look at the actual gold contract, okay, October of 2017, gold was at, let's see. Okay, so you're at $1,300. We're at, bottom line is at $1,200 now. But what Royal Gold had done is that Royal Gold then went all the way back up to $98 in July of this year. Now, it didn't test the high. Got right next to the high, didn't test it, and did not come off the high with volume. So that's really bullish. That is telling me that Royal Gold, can, number one, wants to get to its high. Number two, though, which is even more important, when you have a low gold price like this, and Royal Gold has actually performed really well, that is a big heads up that we may get a lot higher. You can see when we take a look at the amount of money that they're bringing to the bottom line is that in 2014, they brought $237 million to the bottom line. In 2019, $459 million. Pretty intense, because you gotta, in 2019, they plan on bringing $468 million to the bottom line. So you're talking about very large numbers, and what that means is that they have been financing companies along the way at very low prices. What it also means, the way these royalty companies work, folks, is this, is that their risk profile is not building a mine, not on the price of what gold actually is, because they're a royalty company on the gross price of gold. What does happen is this. I mean, if gold crashes, yeah, no one's going to make any money. But what does happen is that as these companies make these deals, meaning Rango Resources, not Rango, Franco-Nevada as well as Royal, when they make those deals, let's say they made the deal, gold's trading $1,100, $1,200. As they push that forward, when they put certain benchmarks, when gold is $1,200, they get 1%. When it's $1,300, that percentage goes up. When it's 14, that percentage goes up. When 15, sometimes maybe we'll pull back a little, meaning it goes down. What I've seen inside those contracts, and those contracts are public, what you've seen is that when they seem to be making the deal, they get an expansion of price about a good $300 on the way up. And if they get that, that's when they bank money so fast and so furious, because the percentage rate of the contract goes up dramatically. And that is what the difference is. They really act as a banker to the gold companies. The differential is that instead of the aspect of a percentage rate they get back for the amount of money that they give them, they go for the royalty and they take the risk that, number one, that they're making the deal right, and then number two, that they get an upside when gold does go up. 877-927-6648. Dow down 180, NASDAQ up 6, S&P's down 8. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Give us a call, folks. And if you haven't checked it out, folks, please come over to our website. Check out our new website. We did a lot of work on it. I want to thank the whole team here, particularly my son, Tommy. Bottom line is that it is such a cool website, and it's so conducive to listen, whether you're on your phone, whether you're on a computer, all of the above. TFNN.com. Take us with you. We do appreciate you growling and prowling with us out here. So, the XLF. Let's go take a look at the XLF. Now, this is going to be a big number, folks, and this is why. The XLF last week, first off, took a long period of time to get moving topside. It moved topside. It broke out of its consolidation, and guess what? It lasted a day. That is not a good indication, folks, for the XLF, #1. It's also an indication that the whatever statement that Powell is going to come out with on Wednesday at 2 o'clock is going to be a dovish versus a hawkish statement. Now, the let's say the rumors that are out there is that, everyone has their basically opinion. The rumors are that he's going to come out with a hawkish statement. Bottom line, that may be what's out there, but guess what? the market voted today with its feet selling the XLF as well as some of the banking stocks. So what we have out here is that you popped right back inside the consolidation that has been trying to get over for a long period of time. In fact, this consolidation went back to May of this year. Each time it came up there, it failed on price. Bottom line, you got right back inside it. And that's saying that, hey, guess what? You know, we'll see if, in fact, this XLF now wants to run into your 2797 number. Let's go take a look at J.P. Morgan. J.P. Morgan out here, down $1.13. Yeah, this is definitely, this is a broken topside when Thursday. Came back inside. Yeah, J.P. Morgan wants to get down to $112, yeah, 116. Jamie Dimon was out there yapping today. Bottom line is that it's just pretty wild what he has to say, but when you look at generationally, it totally makes sense. It's like, so he was out there speaking today, and he thought that the public in general, and Americans in general, will basically stay angry at the banks for approximately 25 years because of the bailouts of the financial crisis. So as soon as you do 25 years, folks, what you have, of course, is that's almost like 2 generations. And of course, you know, 2 generations from now, those folks are not going to actually realize. There's plenty of folks that don't realize right now that as taxpayers, you gave the banks your cash flow, and they're the ones that got it all. That's what it comes down to. And guess what? With cash flow, you can get out of anything and everything. And bottom line, that's what happened. And on top of that, let's see. Do we have any bank can go to jail yet? I don't think so. I don't think so. Anyway, J.P. Morgan, Bank of America. Bank of America came back inside the range also. Let's go take a look at Citigroup. Citigroup is making its way back in. 70, yeah, well, Citigroup's not back in yet, making its way back in. Berkshire Hathaway, BRK. Berkshire is the largest weighting structure, still inside, and that's almost at an all-time high. Came off its high, but Berkshire just went from a price point of $185 up to $223. And what you are going to have, folks, unfortunately, each and every time that you do have a hurricane, BRK, or any type of disaster, insurance disaster, it is a lot easier for these insurance companies to raise rates. If I've learned anything over the course of the years being in this business, and I remember this from years ago, the first time you get a storm, and instead of these insurance companies going to lower price, they'd either trade flat, they'd trade sideways as the storm's going on, and then once the storm was over, didn't matter, it was 50 billion, 100 billion they had to come up with, guess what? Then they all went up because what does happen inside of that business is that they come back and they say flat out that, hey, listen, you know, we have huge, large losses, we got to go up on the rates, and in this particular case, it just depends on when does the next hurricane come, or flood, and that flood, no doubt, was and is still pretty bad out there. We take a look at some of the higher volume equities out here. GE was the big deal out here today, folks. GE down another 43 cents, trading 11.74. GE's going after its high volume swing low. That's the bottom line. You had Sirius Satellite take over. They're going to buy Pandora Media. Sirius Satellite, that got smoked. That was down about 12%. Pandora's flat, and you know, basically shareholders voted with their feet, saying, okay, now what are you going to do with it? How are we going to make money? Comcast got hold of Sky. That's going to be a worldwide company now. That was down $2.22. Comcast had been down $4. That shook it off in a big way. Disney was basically the loser inside of the auction. However, when you look at the equity, equity was up $2.37. Disney shareholders were glad that they did not get Comcast. Because you got to remember something, that when Fox sold to Disney, Fox, bottom line, also is a very large owner of Sky. In fact, it was the Murdochs who started Sky. So Apple, we go take a look at Apple. Apple caught a bid out here today. In fact, all the tech stocks, not all the tech stocks, but the big tech stocks that we talk about a lot, they all caught a bid, and that's what had the NASDAQ go up. Apple rejected lower price at $216, closed at $220. Amazon, the big dog, that rejected lower price at $1865 and went to $1934. You talk about expansion, right? That thing was nonstop. Google rejected lower price at $1146, ended up trading $1173. Netflix, NFLX, and I'm trying to figure out what the catalyst is here, because the bottom line, they all did the exact same thing. Netflix was from $354 to $369. Facebook, which hasn't been able to catch a bid at all, rejected $160, went to $165. Microsoft, different animal. Microsoft is really laying at the highs anyway, but that rejected $112. You're laying at $114.67, and that for Microsoft, I believe, is the new all-time high. No, it's $115.29. I was on the 21st. That was last week. Oh, this is the all-time closing high. That's what the differential is. Yeah, this is definitely all-time closing high. We closed at 114.20 closing. Yeah, 114.26 on Friday. This is an all-time closing high. So, bottom line, they got traction behind the move. Let's go take a look at the SMHs, the chip stocks, because the chip stocks have been having a hard time. That rejected lower price at 106. Now, that being said, this is coming into a monster downdraft. We only did 3.8 million versus 9 million. So the differential is that the NDX does look like it wants to go after its high again. The SMH is not even close. Dow finished down 181, NASDAQ up 6, S&P's off 7.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2019, 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. If we go over to Asia, folks, what you're going to see last night in Asia, they had some action. We had the Nikkei up 0.8%. Hang Seng was closed. Shanghai was up 2.5%. What we're going to see out here tonight, you're going to see Shanghai, more than likely, as well as the Hang Seng, get up into higher price. It looks to me like the Shanghai market has come off the lows. This thing has been a one-way route on the way down. And we take a look at it, this has been trading down since February of 2018, so just about all year. It started out at 3,587. We made a low last week at 2,600. Now, that being said, 2,683. You came off 2,683 with huge strength, folks. If we get another sign of strength like we did last week, that is saying that the Shanghai is going to, number one, not only go up, but it's going to make its way all the way back up to the $3,587, which is going to be pretty wild. You know, what it had done, it tested the lows of its breakout area going all the way back to 2014, did it with light volume. Bottom line, that came off it like a rocket ship. So we'll see where this whole thing shakes out. My take on it goes like this. My take is that you're going to see a larger change of trend in the dollar, meaning the dollar's going to get weaker, the yuan's going to get stronger. All the currencies against the dollar are going to get stronger. And if we do go over and we take a look at the euro, you're going to see that the euro is just about ready to break topside. Each and every time, you know, the bottom line has been up to this 118. It's given it up as the dollar has come down and hasn't been able to basically get the lower price. It looks to me, looking at that Asia markets, however, that they have basically given you the first clue that they want to go topside, and that's also still about currencies. Pretty wild watching this whole thing shake out. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great night, safe night. Join us tomorrow morning. Join Jason, 8:30 in the morning. Great show, morning market kickoff. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.